The win is real and so is the loss. So this is the honest update on the Google case study inside of the practical income portfolio. We realize a strong return from earlier trades, but the replacement Alphabet call is down 28.24% as of today. So I want to show you where the portfolio stands, why I'm holding, and why I'm not adding right now. One quick disclaimer, I am not a financial advisor. This is for educational content, not financial advice. Options can lose the entire premium paid, so do your own research and make decisions that fit your risk tolerance. First, we need to keep the two numbers separate. The closed Google trades produced a capital weighted return of 66.20%. The current call is down 28.24%, but that's unrealized. So it doesn't get mixed into the realized return scoreboard. So I'm not hiding the open loss, and I'm not pretending that the open position is closed yet. All right, so here's how we got here. The original Google Leaps went from $58.10 to $103 exit, producing 77.28% realized return. I also opened two 300 290 put credit spreads for $2.57 each. They were closed at $1.09 and one at 65 cents, producing 22.88% on the maximum defined risk, capital weighted, that is. The closed case study returned 66.2% so far. And that's pretty damn strong. Then I opened a new position, starting a completely new chapter on this trade. So the replacement position is an Alphabet 370 call expiring June 17th of 2027. Now that entry was a debit of $52.88, and that position is now down 28.24%. Now there are 300 calendar days remaining. That gives the thesis time to work, but time does not make this trade safe necessarily. The full premium paid is still at risk. My bullish view on Alphabet is it's not disappeared. I mean, the latest reported quarter, total revenue grew 24%. The other search and other grew 17%. Google Cloud revenue grew 82%. Uh, so the cloud backup, the backlog reached 514 billion. So the backlog is one hell of a number. It shows really how much demand Alphabet is seeing, especially around cloud and AI. So those business results support my long-term thesis. They don't guarantee this particular option contract will make money though. The risks are not small. So Alphabet generated 39.1 billion of quarterly opening cash flow, but heavy capital spending pushed free cash flow to negative 5.9 billion. So management also raised 2026 capital expenditure guidance between 195 and 205 billion dollars. That spending may create an enormous capacity, but it pressures cash flow today. A great business and a profitable option contract are completely separate questions. My trade tree is simple. If the business thesis breaks, I reduce or just exit. If it remains intact, but I don't have a fresh entry confirmation, I'm just gonna wait. If the updated chart and options chain confirms any kind of a new entry, I'll consider adding. But right now, I'm in the middle branch. Okay, the thesis looks intact, but I don't have enough current evidence to justify another purchase. So the plan is to hold the June 2027 call and wait. I'm not adding simply because it's down. Before adding, I want an updated chart, current options chain data, and honestly, a clear confirmation signal. If the loss reaches roughly 40 to 50%, that triggers a fresh, hard review of this thesis and risk. It doesn't automatically mean an exit, and it's not permission to average down blindly. So today, patience is my position right now. So the bottom line is, it's good thesis still needs good management. The 66.2% realized return is real. The 28.24% open loss is real too. I'm not hiding either one, and I'm not trying to force another trade just to feel active. We'll follow this position through management and eventually the exit. All right, well, that was the update. This one was intentionally quicker than most of the videos that I put out on this channel. I just got back and I wanted to get the portfolio caught up, and I didn't want to stretch out a straightforward position update into a 15-minute video just for the hell of it. So the purpose today was real simple: just show you the realized result, show you the open loss, and explain exactly why I'm holding the position, but not adding to it right now. This weekend, we'll get back to more traditional practical income investing video. Uh, that one will have a deeper educational breakdown and something you can actually apply to your own investing and options decisions. So um, I hope that you like this video. If you want to follow for the more practical income portfolio updates and more educational material, or if you just have any something that you'd like me to go over, please drop it in the comment section, and we'll be happy to assist. Thanks for watching. Take care.